making that transition on healthcare.
Yes.
We're going from a world generally where an employer picked or chose your plan for you, maybe giving you a couple of options, but they really chose the plan. And you're really leaving a different type of an insurance product, truly, when you go into Medicare, because Medicare government really becomes the primary provider of your care, and you're looking at supplementing it in the most cost-effective way.
That's right, and the products just do not look anything like you're used to because of exactly what you said. So it is important to get more information, get some professional advice before you make that decision, because although you can make changes, why stress about it?
And one thing I would stress to everybody is that, there's an expression, it's free. Well, the truth is, it truly is free. If you go directly to the carriers, you're only getting one look at things. You can obviously, go through the piles and piles of information folks are sending you, et cetera, make those decisions, take up all your time if you like. But sitting down with a professional like Erin costs you nothing. I mean, you don't pay any less, you don't pay any more. But the neat part is that getting those questions answered that you have professionally probably can be the most valuable to you. So again, if you're getting ready to, what do we say, age into Medicare?
Yeah, that's a good way to say it.
If you're already Medicare eligible, but you're getting ready to leave your employer, and you really want to know what are all the details in terms of doing this, because I'm getting ready to do so in the next 1, 2, 3, 6 months, give Erin a call, 314-863-0008. I promise, she's not as chatty as her dad.
No, I'm not. You people are.
She's her mother, so, that's not such a bad thing. Well, great. While we are waiting for your phone calls, I thought what we would maybe do as our first topic of the day is, what is a game plan for retirement? We always talk about creating a game plan, a written step-by-step strategy that has several goals in mind. Well, really, when we think about game plans, I believe that we can really break this into 5 or 6 different component parts. But the idea is that we're going to be playing offense and defense, because a game plan really has 2 sides, right?
Of course.
So, from the offensive side, what we're really talking about, I think, primarily is how do I create a cash flow plan to replace a portion of my income, which I would then complement with either other income sources like Social Security benefits. When do we do them correctly? Maybe pension benefits. Possibly if you are going to work part-time. We don't have that many clients that do that. But
or you happen to have a spouse maybe that's continuing to work and we're only...
So how do we fit the pieces of the cash flow puzzle together? That's important, number one. But second thing, which is really running coincidentally, is
insurance planning.
Right.
And that's important because not only is that defensive because we're protecting your assets, but it can be offensive because we're proactively making decisions that affect your cash flow plan, because we have to decide, as you transition from your group health insurance, do we move you to COBRA, to your spouse's policy if they're available, or are you ready for Medicare? Those are all important transitions, and they all do have an impact on your cash flow.
And if anything, I would say if there really is an area where you would say, let's avoid making a mistake, the healthcare area really is it, which is making sure that you do enroll in time, you're doing it on a timely basis, but also you're choosing the plan, you're looking at the options that really are there to fit for you, because it really gives you that unique opportunity to do so. And if you're using Medicare Advantage, the cool part is you get a do-over, right?
That's right. Every single year you get to make a new selection during open enrollment. So it is important to hopefully make the right decision for you. But like we've talked about many times, people don't necessarily make bad decisions. You make decisions based in the moment.
Right.
So it's important to take a look at your health now and also consider what this might look like 10, 15 years down the road. So that's what we do.
And, Erin, you're enrolling folks virtually every day. So we're talking about not necessarily during open enrollment, because there are folks that are retiring and are becoming eligible every other month of the year. That's kind of cool for them because they actually have a do-over during the first year, don't they?
That's right. If you choose a Medicare Advantage plan within the first year, you can make that decision to say, hey, maybe this doesn't fit the way that I want it to, and you can switch back to original Medicare without having to go through any medical underwriting. And because you're still in that 65-year age period, you'll get the initial premium, that entry into Medicare premium with your supplement. So it is a good opportunity to test it out.
Yeah, and I guess the other one is that if you're not happy with a company or with it under a Medicare Advantage plan during the first year, when open enrollment comes, you can switch then, can't you?
You can absolutely do that as well. So there are a lot of options in terms of your decisions with your supplement. I know that that part of the fear factor that comes into enrolling in Medicare is people have the belief that once they make this decision, it's irreversible. This is the decision they have to make forever. And I think when you can take that stress off of someone, letting them know, hey, let's try this. Yes, there are limitations to what you can do and when you can do it, but this is not the only decision you'll ever make unless you want it to be. It makes it a lot less daunting.
And not only that, but as you've discussed before, we're in a position once we've done the planning to actually quantify normal ongoing healthcare costs. We can then take those numbers, we can factor that into our cash flow model, make that a part of their expense projection so that, again, you don't know what emergencies, contingencies you're going to have, but we'll also know what is that maximum out-of-pocket expense that we would hit during a year. And what's kind of cool about that is that it takes something that is like, oh my God, $250,000. Well,
let's break it down into what it's really going to cost. And also the other side to insurance planning in your game plan is not specific to just health insurance, because really insurance can make up the foundation of your financial house or your financial game plan.
Right.
Exactly, because you're creating protection elements for your assets, and what our job to do is help you decide which protection you need and how much.
Yes.
And so that's an important component, because we can't play offense unless we're also prepared to play defense, and that's really what insurance helps to do.
Exactly, and again, there are different types of insurance that we get involved with the clients. Number one is, we're doing a game plan for long-term care. Is this planning really required for you? Is this something that's insurable interest situation? Or it's one where we're going to self-fund, and many folks do self-fund on purpose. Some self-fund because they can't, but there are many other options that are out there. The other thing, and we talked a lot about this last week, was sometimes purchasing, but a lot of times is repurposing life insurance that they've already owned and they've purchased for many years. We know the folks that, basically they do create life insurance early in their lives because they want to create capital, because they haven't had an opportunity to work over long periods of time and actually grow that capital so that they can actually then have a capital sum to create the income stream. But once they hit retirement, guess what? You have your money.
Exactly. You already built your wealth.
So, and what's interesting is that with many folks, we're not, our first thing is to say, where are we going with this? They're typically saying, well, maybe we'll cash it in, we'll do whatever. But we find that a lot of times we're looking at repurposing this, whether it's, as an example, last week we met with some folks, and we found out that they had a grandchild who needed a special needs trust. And so we said, hey, maybe what we'll do is we'll take this death benefit. Your spouse doesn't need it. The kids probably don't need it. But maybe what we'll do is this will help fund that special needs trust so that your children can have the inheritance, but we're making sure that grandchild is taken care of.
And I think that's a good point, that, putting this game plan into place doesn't necessarily mean buying things.
Yes.
Most people that come to us, because they're reaching retirement, they've spent their entire working lives not only accumulating assets, but accumulating stuff.
Right.
And like you said, it was purchased with a specific purpose.
Right.
When they purchased it, now that purpose either no longer exists or has changed. That didn't make the decision bad, and that doesn't make the product bad either. We're just looking for a way to say, hey, this piece you already have, it fits in a different place in the puzzle now.
And, it is unusual, and I'll say the word only one time, annuities, okay, where we do have folks that have purchased annuities from other reps in the past, either insurance agents or brokers. And they came to us, we saw somebody yesterday, and they looked at us and they said,
we don't know what these are they bad?
Yeah, did we do wrong?
Is this bad?
There's so much negativity. Did we do wrong? Did we damage ourselves? Or how do we, if we want to extract ourselves, can we do so, and is it possible to do so? Well, with our conversation, what it came down to is that these products, whether they're annuity contracts or whether they're mutual funds or CDs or limited
life
partnerships, whatever it would
anything.
Be, what we're really looking at when people bring us stuff is that, A, can we repurpose these? Can we actually now use these either, A, what they were meant for, or B, for maybe another purpose? so that we can make your game plan work. And in most cases, the truth is that it really can work. They bought stuff because they thought they were good deals, and the truth is, we get into the whole part. The next game plan is the investment side, right? Creating a portfolio, we like to say with purpose, right?
Right.
And we find that functionally, at least as planners, what we have done, our unique planning style, is that we like to purpose things. This is supposed to take care of this function. This is supposed to take care of that function. Whether something is supposed to be there to create income, we like to call it the milk money. Some is for growth for the future. Some is for liquidity. Giving each asset a purpose, a function in your portfolio, etc., and that's kind of important as well. Another one is tax planning, right? When we're talking about tax, our life is all about taxes, right?
That is right.
Whether it's the income tax, capital gains tax, federal state tax, the gift tax.
It's a lot of taxes.
Right.
Medicare tax.
And we talk about taxes, it's, certainly what we want to do is minimize taxes if we can. All of us are patriotic. We know we have to pay taxes, but, we, especially on income tax planning, what it really is a function of is turning on and off faucets, right, Faith?
That's right. Taking a look at what your composition of assets are in terms of inside of retirement accounts and outside of retirement accounts, and then designing your cash flow to be tax efficient, but also bearing in mind that those after-tax dollars are really gold because you've already paid taxes on them.
Yes.
So that creates significantly more liquidity for you. So as opposed to saying, hey, you'll go 10 years without paying any taxes because we're going to drain your entire non-taxable account, or after-tax account doesn't necessarily make the most sense long-term. So trying to design a plan that's going to last as long as you last.
And again, as we've discussed before, most of our clients make it to, I call it adulthood, which is age 70 and a half.
Where you have to take it.
Yes, and there are very varying schools of thought here about turning on and off faucets beforehand or not, doing Roth conversions or not, etc. Every game plan has to be flexible. We know we have to play offense and defense, but at the end of the day, every game plan is really unique.
Right.
It's only unique because of your own personal circumstances. We're not even talking about how many zeros that you have in your net worth, but also because we know life changes. It's not unusual. That's why one of the things that we do, and we've talked about this often, is that we're really interested in keeping involved and keeping in contact with our clients a lot more than this once-a-year stuff, okay?
Right.
We find that as folks age, especially our clients when they're getting to Medicare age and afterwards, life can change quickly, not only for them in terms of health, but also in terms of their family situations, whether it's children, grandchildren, etc. The paradigm can change very quickly. As an example, we were visiting with some folks yesterday afternoon, and they were telling us how they had just gotten back from Maryland, where they had visited their new grandchild, which was really fabulous for them. Obviously, we were really happy. This was a big thing. This is their first grandchild, and my question for them is, well, what's your plan?
When are you moving?
Right. What's keeping you here? What was interesting is that they had one child in Maryland and two other children that were in Pennsylvania. So it's called, you're here in Missouri.
Really? What is keeping you here?
Yeah. Why are you here? Will you be here? Should we be making arrangements for cash flow so that we can actually rent something, do something, etc., so that you can be there as often as you can? Because the truth being,
it's where you want to be.
Well, not only that, but the kids. It's not bad to visit with the kids for a couple days, but after that it gets small. It gets cramped. You're not going to want to do this for long periods of time, and in your case, you have to determine whether it's do I want to be there for a couple weeks at a time, or do I want to be there all the time? Because grandma time's precious.
Right, and I think
it also isn't that. There's really only a window there.
Right, and I think bringing that back to the tax planning side of the game plan, which is there are many cases in which people do things that are not tax efficient, but that is okay.
Right.
Because in this particular case with our client, they didn't have a large amount of assets outside of their retirement account. So, creating that extra cash flow, we can absolutely do that, but it will be taxable. But that doesn't change the fact that they want to be in Maryland with their new grandbaby. Right. So our goal is to facilitate in any way that we can.
We're enablers.
Absolutely.
And, it's interesting because that's why, I felt like 15 years ago I developed this idea, or we call ourselves the coaches. Because at the end of the day, the coach is somebody that stays on the field with you the entire game. It isn't just at the beginning to draw the plans, then walk in the locker room and not really be there. Because we know that